Hey, good afternoon, everyone. I'm just going to do a really quick test to make sure you guys can hear me. Somebody give me a ping test back.
You were good.
Okay, good afternoon, and welcome to Weathering the Storm Episode 1. There might be an Episode 2, we're not really sure, hosted by Fort Meade Alliance. So we want to thank everybody for joining this afternoon. I know this was a really quick pop-up webcast, and we got a fantastic audience for folks joining, and our panelists and our moderators so fast. That was fantastic. So even as Congress appears to be moving towards the ending the shutdown, I don't think it's done just yet, but we're going down that path. The conversations that we're going to have today could not be more relevant than what's going on right now. So we're kind of navigating the ripple effects of this continuing resolutions, or maybe it's a debris field, however you want to look at it. Funding delays, or political uncertainty that we have right now, because it's all becoming part of the norm, unfortunately. So these moments really test the way this group comes together and shows our strength and adaptability and resilience that we have as a community. Today's seminar is really to share some experiences and offer some insights and look ahead to what recovery looks like. You'll hear from some of our leaders here and our moderators and our panelists to just what it feels like to weather this storm. How do you do it? What's recovery look like? And kind of anticipate what's going to happen next. So the goal here today is to provide some perspective and just kind of pull together as a team and make everybody feel like, hey, everybody is everybody's safety net. That's what I always say. So this isn't the first time this happened. It's not going to be the last time, but no, we're all in this together. So having said all that, I'm just going to get off the stage here and turn this over to Amy Steinberg with Vibrant. She's one of our Fort Meade Alliance board members, and she'll lead us through our opening panel, How We Survived This Before. Amy, over to you.
Thanks, Roxanne. Good afternoon. My name is Amy Steinberg with Vibrant. I'm proud Fort Meade Alliance board member and Meade Business Connects committee member. I'm pleased to welcome you to today's first session focused on preparedness for future shutdowns. We're going to highlight lessons learned from our panel of esteemed business owners. First, I'd like to introduce our panelists. We've got Bill Donahue, former CEO of Praxis Engineering and president of Nexus Solutions. We've got Mike Henke, founder and CEO of Tensley Consulting, and Angie Leinert, president and CEO of Intelligenesis. Thank you so much to each of you for being here. Let's get started with the first question that I'd like each of you to answer. The first question is, what was the most challenging aspect of the previous shutdown or CR cycle for your company? Bill, why don't you kick us off?
Okay, thank you, Amy. I think for us, probably in every shutdown we've been through over the last couple of decades, it's probably just been the uncertainty of it. We're heading into something. We don't know whether it's actually they're going to have a CR at the last minute or they're not, or whether it's going to be a shutdown. We don't know exactly who's going to be able to go to work the next day or the next day after that. And throughout that whole process until it ends, we kind of really don't have clarity. So I think the uncertainty is probably the most challenging piece.
Yeah, for sure. Thank you. Angie, would you like to jump in?
Sure, he took my answer. So I think, definitely uncertainty. I think uncertainty is the hardest part of it. I think the other part is just keeping the morale up, especially with as long as this shutdown may continue to be in the future. That was really difficult. Not for a lot of the services companies to your people work on site, not knowing when they were going to be able to return. What was, if they were going to run out of PTO or things like that. I mean, I think that was also one of the challenging things that we had to navigate this time, and we didn't have to do that before.
Yeah, certainly morale is a key indicator of how things are going. Mike, how about you and Tensley?
So I'll go on the operational side. I'll say cash flow, right? Concerned about who's going to be able to work, who can we invoice, is there anyone at accounts payable to pay us? Those types of things, making sure our line of credit is good to go, reassuring our employees that we're still operational. We have good cash flow. You don't have to worry from that perspective. You're going to get a paycheck, trying to get them off the ledge, so to speak, and ourselves off the ledge, making sure that we have all of our ducks in a row to make sure that We don't know how long it's going to happen. Like in 2013, we thought it was going to be a month. It was 3 days for Tinsley, but that's not the same for other companies. So anyway, that's my perspective.
Okay, thank you for sharing that. Another question, how did each of you approach staffing, retention, and communications with your workforce during the shutdown? Angie, would you like to start?
Sure, that way Bill can't take my answer, right?
Exactly.
So we really go for kind of transparency over perfection. It's the most important thing for me to kind of have a plan and to take it in small increments because of that uncertainty. We're not sure how long things are going to last. So if we just kind of take it week by week, this is what we're going to do this week. This is what you can expect from us. Over communicating, making sure that they know exactly when the next bit of communication is coming from them, when the next update is happening, and then making sure that we hit those marks as we say that we're going to. I think that plan, I use a plan as a nice warm blanket. It makes me feel comfortable because I can know what to expect, at least for a specific period of time.
So Angie, just to follow up to that, were you connecting with your employees through email, text messaging, through your intranet, or how did you communicate with your workforce?
So all of the above. We emails first were more on the regular basis, right? Because we do have people that we're still able to work. Also setting up different kind of Teams meetings so that people could jump online, kind of ask their questions, phone calls, in person. I mean, really kind of whatever is most convenient for them. Obviously, all of our employees, are different people and live in different locations and have different preferences when it comes to how they want to communicate. So trying to get as many of those media points as possible to let them see that smiling face, give them that hope, let them know that we're all in it together and that we're going to get through it. And this is the way we're going to do it, 1 week at a time.
Sounds good. Thank you. And Mike, how about Tinsley?
So actually, I'm going to use a reference of COVID. COVID was a bigger scare for us than it was maybe a shutdown because we never knew what was going to happen. And so we did daily stand-ups and daily communications to the company because of all the uncertainty. And that actually transformed us into us making it easier for us during shutdowns and CRs because we knew that communication was so important. But it wasn't daily for shutdown, but it was more weekly. And then we also adapted as the storm continued, right? Different policies. We changed policies halfway through so that we can make sure that everyone was good to go and not worried about paycheck, payroll and things like that. So we had to adapt because 20% of our folks couldn't work. So they were really going into their PTO. So we had to change some of our policies temporarily to take care of them. So that's how we did it. And for staffing, we went on overdrive because a lot of people were home. So we got a lot of interviews in.
There you go. I like that. And can I ask a follow-up? How are you communicating with your primes where you're a sub and you've got folks who need to report to their prime contracts? How are you communicating with them and were you hearing from your prime contractors?
We were hearing from the primes. Our contracts and finance team would communicate with them, making sure, and our program managers, letting them know if they're on call, or if they're able to report, or if they're at home and then they get called in. All that happened on a daily basis. And we, as a prime, did the same thing to our subs. We were communicating with them every day, unless it was known that they're good to go from now on. Like in our contractor space, there was no hiccups. They kept working. There was no issues there. It was mostly the people working on site.
Yeah. Okay. I think the daily stand-up is a really interesting, a nice takeaway. Thanks for sharing that. Yeah. How about Praxis and Nexus for you, Bill, in your experience?
I think we probably did it well at Praxis over the years. A lot of primes, and so we had a lot of teammates, a lot of engagement with the government leadership during the shutdowns, during the sequestration. Even, I guess I was kind of almost gone by time the COVID piece was happening. I think we intentionally tried to, when we started Nexus, tried to get the communication into like an overdrive mode where there's a lot of touch points with pretty much every person all the time, not just during a shutdown, so that the relationships are stronger and deeper with the leadership across the organization. So when we get to the specific shutdown coming up to it, and then throughout, I would send out all employee emails periodically, not a lot, not like a daily stand-up like Mike described, but then program managers, the HR, anybody that was being really affected by it, not able to work, our HR manager was reaching out to them on a regular basis, checking in. Our security folks were working because they were passing clearances to different venues. If somebody could work in a different location, and just making sure so there was a lot of touches throughout on an individual basis, which I think was really comforting. We did a kind of a hybrid mode where we kind of picked up part of the time when people weren't working, and they picked up part of the time themselves, which worked out nicely for us and for them, I think. But I think it's just the communication. We did the same thing with the recruiting and staffing kind of thing. We were in pretty heavy mode on interviewing and submitting candidates to positions that aren't even open quite yet, that kind of thing throughout, with the intent of trying to power through and maybe be able to pick up some additional revenue soon after the shutdown was over. So yeah, I thought it went pretty smoothly. I think comfort, you don't want your people to leave. You don't want them to leave the industry at all. You don't want them to leave and just go to another contract because it's on the accepted list, whatever. So just constantly working through 45 days and knowing exactly where everybody was and what they could do on an hour-by-hour basis. A lot of work, a lot of extra work for primes, for the government, for the subcontractors as well.
It sounds like in each of your cases, your employees came out of these situations feeling even more connected to the company and well communicated with and cared for. So kudos to all three of you. My next question, Bill, probably I'll start with you since it stems from what we just talked about. What changes did you make coming out of sequestration or a shutdown that still shaped your operations today?
I'd say pretty much every time we get anywhere close to one of those events for the last 15 or 20 years, it's just learning from the last one. So I think one walk away from today's session for all especially the small companies, is do a retrospective, look at what happened in the last 45, 60 days, and try to figure out what you can do better starting today, starting tomorrow, because January 30th isn't far from now. So even if they do another CR, even if they pass a budget, there's probably still a chance we're going to be right up against the wall again, even if they get it done, and they may not. I mean, it's not like the politics is as copacetic as it might have been 20 years ago across the aisles. So I'd say just getting the Boy Scout motto: be prepared. Just do everything you can do. Looking at the retrospective, start building the deeper relationships with your primes, with their staffing managers, with their subcontracts managers and PMs. Do the same thing with your employees, with your bankers, with anybody and everybody. Just try to figure out, maybe write down all the things that stressed you this time, and try to figure out how you're going to try to eliminate the stress. Because if you can get the stress out of the picture because you have a clear picture, I think you have a better chance of communicating and bridging the relationships with stressed out employees if you're not also stressed. So if you can try to avoid that, I think it makes it a lot easier.
Yeah. So to pull that thread a little bit, Bill, do you feel like it's important to reach back out to your employees after one of these situations to ask them how the company did in response and how they felt things went?
Yeah, I'm sure we'll be doing that whether it's coming from the program managers, from the HR department, from guys like me and Jerry, whatever. I'm sure Fred we'll all be having touch points with them in the coming days and weeks.
Right, that sounds good. And Angie, from your experience from sequestration to where you are now with IntelliGenesis, how has that shaped your operations today?
I mean, I think that Bill did a good job talking about the relationships and everything we need to do to kind of put ourselves in a better position, right? No matter who that is on the operations side and the customer side. I think that's important for IntelliGenesis specifically. It just reinforces our need for that financial agility and that diversification. That we have to have multiple sources of revenue coming in, not just from the federal government, so that when these types of things happen, then we can easily just kind of transition our people into some other opportunities to be able to allow them to continue to have something to do and to make sure that we're whole as a company, I think is really the most important piece that we're walking away with.
Good point. So having a diversified program portfolio allows your employees other opportunities during times of shutdown. Thanks for sharing that. And Mike, how about Tensley?
So using a sequestration example, we learned quickly that the programs that we were on were mission focused. And so we were not affected by the sequestration like others. We didn't have any growth that year, but we didn't lose anything. So it's important that we were on mission systems because mission still had to work, and that was a lesson learned that we continued to do. We make sure that we were going after programs that weren't going to be affected by those types of things like infrastructure and development programs and stuff like that. We wanted to make sure that that continued. But for the smaller companies, the foot stomp is line of credit. Make sure that if you're financially sound and you have a great relationship with your banks, that both Angie and Bill said, because that's going to get, if your folks are at home and you're not diversified, like Angie said, you're going to depend on that line of credit. And I've said that in multiple different events that I've spoken at, that building that relationship with your banks is a critical thing. So.
Yeah, line of credit and cash flow. You hit on that before. That's important too. I mean, you need to save some money, make sure you're ready for those rainy days because they do come.
Right. And it's the business we've accepted that this is the business we're in. So we're going to, like you said, or I think it was Roxanne said in the beginning, it's not the first time, it's not the last time. So.
That's a really good point. And our next panel will touch on that in more depth. I have one last question that I'd like to pose, Mike, if you'd like to go first. What mistakes should companies avoid making during a shutdown or avoid repeating during a shutdown?
Avoid doing, avoid not communicating for one, but also understand and making sure that your employees understand that you're taking on the risk, but it's a shared risk, right? They've decided to be in this industry as well. So they know that there are CRs, they know there are shutdowns, they know there's snow days. We're doing the best that we can to maintain the company and get through this, but understand that they have to be flexible as well. And understand that we're going to change and adapt depending on the length of it. So I think that's probably what I can. And controlling spending, I think the important thing is perceptions, right? So if you're going to lower your bonuses, or you're going to delay your bonuses or defer them, be careful not to have a Christmas party, right? This shutdown is at a critical time. Not every company is the same, but our bonuses come out in December, right? So it's not a great time to shut down the government, because our employees are concerned about, are they going to get their bonus? Are they going to lose all their PTO? So that kind of thing. So
Yeah.
Don't fail to communicate.
That's a good point about discretionary spending during times of shutdown, and the message that it sends not only to your employees, but also to others outside the community. Bill, how about you and your experience? What mistakes should folks avoid repeating?
I think you often get caught up in the rat race during a scenario like a shutdown, and you're trying to track the 100 emails you got from the different primes you're working with, and about each person changing hour by hour. And if you happen to be a really small company where you're actually working on site yourself, you're missing those emails all day long, probably. So if you're working and some of your employees aren't, and the emails are coming in, I think there's a risk that you're going to be too slow to communicate. So I think that it's always comes back to the communication. And if you get real busy just trying to track what's going on because you're not prepared, I mean, we start a month before our CRs, even a budget's about to happen, and we're tracking every employee, what building they're in, what places they have VRs, and where they might be able to work and talk. We're doing all these things a month before it even gets there, and most of the time when it gets to that date, we did it for nothing. I mean, we did it just to be prepared. But I think if you're not careful, you're so far behind and you're catching up, and therefore your communication with your employees isn't good. They're hearing one thing, you can't collaborate it because you haven't been able to see it yet, and I think that puts you at a disadvantage. And that's when people perhaps lose faith, and perhaps retention becomes an issue. So try to avoid that.
That's a really good point. I know, speaking for Vibrant, what we were able to do for some of our employees was to host some in-house training for our folks during that time. We had folks who were low on PTO and were uncomfortable using LWAP, so that we offered some in-house training, because if they're going to advance some certifications, that it helps to advance the company as well. And so we were creative by doing some planning and getting that training, those things prepared in advance of a shutdown. And I think that helped. It also helped with morale. Angie, how about you? What mistakes should companies avoid repeating?
I think too, just remember that that you're a leader and that you kind of set the tone for your company too. And we can all also get depressed and frustrated, but that's not going to help the situation. So trying to again just be as positive as possible, but also transparent, and just trying to have that keep that morale up for your employees, and checking in and showing up and making sure that if you have an office space, you're there every day. You are working for your people. And I think that's one of the most important things, that again, sometimes we can all start to feel bad or get depressed a little bit, but we have to keep our heads high and just have to keep pushing through.
That's a really good point. Lead by example. Thanks for sharing that tidbit, Angie. So that concludes this section of the first panel. Thank you, Bill, Mike, and Angie, for sharing your experiences. I am 100% certain that our audience learned a great deal from each of you, and that you breathed a sigh of relief this morning with the good news about the shutdown. Now I'm going to pass the mic over to Paul Deeren, moderator of the second session.
Thanks, Amy. Appreciate that very much. Good afternoon, everybody. As Amy said, I'm Paul Deeren, and I've been on the Meade Business Connect Committee for several years, and I've really enjoyed working with the group and learning about all the ways that FMA helps its members. So hopefully you get some real value and learn some things from the webinar today. I'm also the team leader of our GovCon specialty lending group here at Atlantic Union, where we have about 200 or so government contracting clients, and about $2 billion in loans committed to the sector. So it's a big business for us. I'll be moderating this next panel, which I think includes some of the most knowledgeable and experienced folks I know when it comes to government shutdowns and how to navigate them. And I know we're all going to learn a lot from the webinar and listening to these gentlemen. So let me just briefly introduce them. Steve Harris of the Professional Services Council, also known as PSC. Steve is Vice President for Defense and Intelligence at PSC. Prior to joining PSC earlier this year, Steve served at CISA as Deputy Executive Assistant Director for Infrastructure Security, and led CISA's efforts in securing the country's critical infrastructure. And before that, Steve also served with the DoD in various positions. So welcome, Steve. Joe Humphreys. Joe is the market executive and heads up the GovCon group here at Atlantic Union Bank, where he oversees our team of 23 individuals that serve the needs of our government contracting clients. Joe has vast experience in the GovCon sector and other industries, financing really everything from working capital needs to mergers and acquisitions to ESOPs and recapitalizations. He's helped our clients navigate numerous prior government shutdowns, and will be providing some really practical advice, I'm sure. Joe also happens to be my boss, so I'm going to be nice to him here today. So, and then finally, Sai Alba. Sai is a partner with Polero Mazza, one of the leading law firms focused on the government contracting market. Sai advises his many GovCon clients in matters including regulatory compliance, teaming, and joint venture arrangements, and mentor-protege arrangements. He also handles contract dispute act claims, termination for convenience settlements, suspensions and debarments, FAR and DFARs, and many other issues. So he's a busy guy. So welcome, Sai. So let's dive in and start the discussion. I'll start with Steve. Steve, kind of first question for you. What guidance are you giving to federal contractors right now as agencies manage the CRs?
Paul, and thank you again for the opportunity to join this webinar today, and hopefully meet many of you and be able to provide some insight. So it's a theme I'm going to steal from the first panel: communication, and in particular communication with the contracting officer. Again, that is where direction is going to come from. I know, during the shutdown, not all contracting officers were available. Some were furloughed, some weren't. So now that the government shutdown has concluded, some of those folks are coming right back in today, going through their inboxes, trying to answer all those Teams messages, voicemails, everything else. So, having just been on the other side all of 5 months ago, and bringing employees back after a shutdown. I totally understand, patience, which is something that is very difficult to, have just given what everybody's gone through for the past 43 days, if you would. But, again, maintaining that communication, but then also, along those lines of communicating that you're ready. If a stop work order was issued, that you're ready to begin that work, that you're ready to submit the invoices if you haven't already submitted the invoices already, and keep invoicing that work. That you have continued to meet deliverables if you were continuing to work on contracts despite your contracting officer or your core possibly not being there and the work was funded. So again, and then just that you are immediately available for resumption of any stopped work and, quite frankly, any new work that may start as well.
Awesome. All great points, Steve. And so if you're a company affected today, what kind of signs should you look for that might indicate delays, pauses, or any changes to planned awards?
So at PSC, and we'll validate this as well, coming from the other side, on the government side, we at PSC we use a metric of every 1 day that there was a shutdown, it's approximately 3 to 5 days to restart work. So I don't like to do public math, but that quickly adds up to almost 4 months of being behind, even on the lower side in some cases, which means we're already looking at delays to work that might have been in process right before the funding lapse occurred, let alone work that has not occurred because maybe PMs and other planning types that were supposed to be doing that work now to get ready for second, third, fourth quarter type awards is going to be delayed as well. So again, I think that is the first thing, that comes to mind is you have to understand the magnitude of the delay. That doesn't mean that in some cases, some efforts are not going to be prioritized and it might get up sooner rather than others, but it's going to come at the cost of something else not being prioritized. I won't get into that adage if you prioritize everything exactly. And then, I think it's also important that, contracting decisions are not centralized. So it's going to vary depending on contracting officer. It may vary by agency. It may vary by department, let alone division or anything else as well. So it is important to understand where that guidance is coming from. I think, being on the lookout for anything that is issued agency-wide, I mean, in terms of any sort of declarations about things, about how, how to submit invoices or anything along those lines, just again, come sort of back to the first point, communicating and looking for communications that are coming, either being pushed out via email or published perhaps on web pages or things along those lines as well.
Just a follow-up to that, Steve. I mean, I imagine, these contracting officers and folks and the federal government are going to be just, inundated with outreach from companies starting today. How's the best way that people can kind of, expect that all to play out?
Again, I think, hopefully everyone has a good relationship already with their contracting officer or their contracting officer representative. So we'll just assume that's already there. It is, to continue communicating, to understand. And, folks are eager to get back to work. They know how far behind they are in terms of, wanting to get things done. And you all know what you want to get started as well. So I do think, keeping clear, continuous communication, up with folks. I do think, it is important to make sure that, particularly in the case if your contracting officer was furloughed, making sure that they are aware of what work you may have been doing while it was going on. Again, making sure that they know what deliverables you have met for work that was funded. That you've got, that you're, and like I said earlier, that you're prepared to start work, that if a stop work order was issued, and that, again, preparing to seek recoveries and things along those lines as well. I know from our, as a trade association, one of the things that we continue to push for, and we pushed throughout working with, the legislative branch, if you would, is also figuring out some way to offer back pay. Because as we all know, back pay for federal contractors is not guaranteed in the same mechanisms. It's not 100% guaranteed, but at least based on the CR that went through, federal employees will see.
So I'm definitely sensing a theme here from the prior panel and from your comments that communication here is definitely the biggest part of the effort, right? And how, how do you recommend companies should be communicating with their contracting officers, or because in the case that some of these people are not going to be there anymore, or what tips would you give?
Well, I'm sure Cy will probably offer some from a legal perspective, but I'm guessing probably in writing. Emails are going to be important, but emails followed by phone calls for follow up. And again, it's just very important to have all of your documentation, whether you're on the government side or on the contracting side, of conversations that occur, because again, this is a time of stress. I think that was alluded to earlier. Again. You heard the financial stress that was discussed in the first panel on both sides, if you would. And now you've got the stress of just trying to make up time, which is something that we can't really do, but yet we're going to all try to do it.
Yep. Great. Well, thanks, Steve. Those are all terrific thoughts and great guidance for all of our attendees today. So really, really appreciate you weighing in on some of these key questions. So Joe, turning now to you, now that the shutdown has at least temporarily ended, right? How can companies better position themselves financially and plan with their bank, before the next shutdown occurs?
So thanks, Paul. It sort of depends on the size of the company and the diversity of the contract base, the criticality of the work that gets done. But in general, if you're a fairly small company, just call up your bank and say, hey, here we are, and we're either going to continue to work or we're not going to continue to work. We have a plan to use PTO or let people borrow their PTO or whatever it takes to keep the key people happy. The hole's going to look like this, and can you fill it for us? And the answer is, generally speaking, would be yes. There are some issues though, right? There's a lot of companies that have grown a lot, and their cash basis pass through entities for tax purposes, so the tax burden goes to the principals of the company. When you're a cash basis taxpayer, when you're growing real fast, your cash basis income is negative, so you build up a massive amount, in some cases, a massive amount of deferred taxes that aren't accounted for anywhere because you're not a taxpayer in the entity. It's not accounted for there. People don't think of it in their personal situations. So one of my keys to people is find out how much of your retained earnings is really not retained earnings at all, but deferred taxes. Because when the tax bill comes due and when growth rates slow down, and they do come due, they have to be paid, and then decide how much of the rest of the capital you're willing to invest into business while you go through the stresses and strains of keeping people that are key to your business in the future gainfully employed and paid, so that they don't look for other things to do. And then talk to your bank about where you are and what you need. A lot of these smaller companies have borrowing, what I call borrowing-based lines of credit. So they have a percentage of receivables. If you can't get the bill out, then it's not a receivable. You might want to have a conversation about changing the definition to include whatever it was plus $1 million or $2 million or however many dollars it's going to take to get from here to there. And then talk to your primes and talk to your subs. A lot of companies are subcontractors, and the primes have contracts that are pay when paid. If they're not going to get paid on the work, you're not going to get paid on the work either. And so you got to do a cash flow forecast and see where you are and see what you're going to need, and just communicate with your financing source. And if the financing source doesn't understand the government contracting business intimately, there's plenty of other people around that you can talk to see what the strategies might look like. And I hope that, it's been a tough time in the government contracting. You had the DOGE disruption, And then you had, and that's still going on. I think it's finally reached the Defense Department now in earnest. But the reality is that it's not the same business it used to be, where it's totally asset light, and not a lot of fixed costs. There are fixed costs that are not normal fixed costs. They're mostly people costs that you have to bear when you're bidding on something and you're promising to deliver certain people to the opportunity. And the same thing happens when there's a shutdown. You got to keep those people so that you can go back to work when it's over. So working with your bank and working with your or whoever your funding source is, um, to go through the arithmetic of your business and go, if this, then that, if this, then that, and get their commitment to get you through to the other side, would be very helpful. And after it's over, have a conversation about what worked and what didn't work, to make sure that everybody understands what the pressure points are and that we didn't miss something along the way.
Great. There's a lot to unpack there. So thanks, Joe. And Angie, I think it was Angie, touched on the concept of liquidity and how important that is in times like this. And when we think about government contractors, how they conserve their liquidity, and build a little bit of a cushion, what steps can they take to do that, during these kind of situations?
So most companies have earnings, and all they need to do is retain them and not distribute them all or more than is necessary. And it's fairly easy to build up liquidity quickly in this industry, if you've got a decent margin. And working capital is something that you need to understand, or your CFO needs to really understand and explain to you where you are and what you need to do. And acting prudently but quickly and having a plan is the only way to go. And having a working capital plan makes sense as well.
Yep. I mean, and you and I know we kind of define liquidity here as what cash you have on hand, and then obviously what your capacity is under your line of credit. So obviously you want to build a cushion there and have that ready to go. So Joe, we've talked here a lot about communicating with the government, communicating with your banker. How frequently do we like to see kind of clients reaching out to us and keeping us updated on what's going on?
So there are some clients we don't have to communicate with. We've known them for years, forever, and they'll do fine. They've been through this before: whole shutdowns, partial shutdowns, sequestration, God only knows what. They have fortress balance sheets, and they'll get through to the other side. The ones that are less experienced or newer in the industry, or just bought out a partner or did something, some capital transaction that removed a lot of the liquidity, those people need to communicate up front, and then on a regular basis, whatever makes the most sense in terms of a rhythm for the business and how it works. And again, it depends on the diversity of the contracts. There are 480 procurement centers or more than that in the government, and a lot of people involved in the procurement process. So just communicating with them is probably more important than communicating with your bank. The bank either knows what it's doing and it'll support you, or it doesn't, and it won't know what to do. In which case, you can tell them what to do, and maybe they'll do it. Or you can call your accounting firm or your finance professional, other finance professionals, and find a source that can help you get through to the other side. It's a great industry. It's essential to the national security of our country, and making sure that it has the resources to get from here to there is absolutely imperative of a financing partner.
And just as a follow-up, Joe, what information does a lender need to know to support you during the shutdown?
We need to know what your billings are going to be even before, or even if you can't bill, but you're required to work and there's no payment office to pay you. We need to know what the work's going to continue to do. And even after the shutdown happens, there's a great big pile on the accounts payable desk of whoever it is going to pay you. And it may take them a little longer. And so just sort of knowing what the parameters are, best case and worst case, of how the cash is going to flow through the business would be very helpful.
Yep. We touched on this before. I mean, cash flow forecasting is really important. We always ask our clients to, even outside of, government shutdowns, we ask them to do that as well, which is always a good best practice.
If you're managing your contracts with a waterfall backlog report, that's a really good tool to know what you're going to need for what and when, and if it stops, what you're going to need for what and when. I mean, it's a great tool. Most of our customers do that. If you've got milestone billings and you're going to have to continue to work, you're going to need to get that done. The milestone may not get paid, but you're going to, the milestone will show up still regardless, even after the government's back. So you just need to talk to your funding sources to get the financing that you need to get through whatever you're going through.
Yep. Great. Any other final thoughts, Joe, before we move on to Cy, or you would recommend?
We have we have about a month reprieve, and maybe they'll get some appropriations bills done, and maybe they won't. I'm glad to see the agricultural bill get through. The government contracting industry is crucial, but so is agriculture, and they're in a world of hurt.
Yep. Well, thanks, Joe. Much appreciated. And so now let's just shift gears a little bit and get some thoughts from Cy about contracts, performance obligations, and the expected ramp up here that is coming, obviously. Cy, can you speak to what legal or contractual options contractors may have to recover costs incurred during the shutdown?
Yeah, sure. And just even before that, just one thing to kind of touch on that. So I've had some folks ask me about back pay for individuals, so it kind of ties together. But one thing to note is that paying employees is not like other business expenses. If you can't pay employees, so if you keep people on board, you're going to be personally responsible for that. And in most, even if you have an LLC or a corporation or whatever, the owners and even managers in some places can be responsible for paying employees, and that's not dischargeable in bankruptcy or anything like that. So if you can't afford to keep people on board, you really need to take that tough decision and furlough folks, because generally speaking, the government is not responsible for back pay unless there is, like in that 1 year it was talked about, there was a bill put forward to pay contractors. So unless there's a situation like that, if you get a stop work, you have to immediately stop. And any decision to pay people is a business decision and not something the government will generally be responsible for. Now, to the point though, if you talk to the contracting officer, if there's time before they get furloughed, to see if they need you to come back immediately, that at least gives you the argument of sort of standby costs, we'll call it, to keep employees on. If you need to come back immediately with no notice, so like for instance today, if they just called you and said, I need your people here right now, if you knew that ahead of time, if you communicated, which I know has been a big theme here, with the contracting officer, and they told you ahead of time, keep your people would be best. Second best would be, we need you to come back immediately. That at least gives you the argument in the case of an REA or a claim to get some sort of back pay for the folks that you had to keep on board. Because the general rule is that you get the stop work, you have to immediately mitigate all costs. That includes laying people off or furloughing, paying people. And if you let them use PTO to pay them, all that kind of stuff, you're going to be responsible for that unless the government said they were going to pay for it. But the other thing is, if you don't get a stop work, then you're obligated to continue working. And this is one of the first times I saw a lot of folks that I didn't think this was that unexpected, but I saw a lot of maybe inexperienced contracting officers that just left and they didn't issue stop works. And I don't know, in some cases, I think it was a mistake. In other cases, it might have been intentional. But in those cases, you're obligated to continue working. And what gets really confusing is if you can't work because doors are locked or you need supervision or something like that, it gets really squirrely really fast. And there's not a ton of good case law or regulations on how that's supposed to work. So again, just being prepared for some of this uncertainty, and I think trying to get out in front of it and communicating with your contracting officers before January, because we could be in a situation in a few months, as been alluded to, where there could be another shutdown, and being prepared or being aware of how the government is going to treat things could be critical to any sort of recovery in that case.
So when you talk about being prepared, like specifically, what actions would you recommend to contractors as they try to protect themselves to recoup those costs?
So I would say talking to the contracting officers like early or ahead of time, if it even looks like it's going in that direction again. And this is just not now. This is anytime this situation is happening. And seeing, you might not want to ask directly, do you want me to keep my people on board and keep paying them? Will you pay me? Like, that's maybe a little too direct, but at talking to them about the need to come back and immediately resume work, because then that at least gives you the argument. Now, the reason you might want to be more direct is so you don't get in a fight. All right. Because if they're not expecting the bill and then you send it to them, even if you have a good legal argument, if they refuse to pay, you get stuck in the claims process and potentially appeals, and that can just be very frustrating for you and for them and all involved. So you could look at it both ways, being direct versus not.
Yeah. And have you seen instances where, obviously the contracting officer you were dealing with before the shutdown is not there anymore? And then how do you handle that?
Yeah. I mean, I've even seen situations with USAID where nobody was there anymore. Right. And so in those sorts of cases, as soon as someone is assigned, that's who it's supposed to go to. And in the case, like really bad cases, I actually had people sending things to Marco Rubio, because who else, if USAID is gone and everybody is gone, what are you supposed to do? Because the Contract Disputes Act says everything has to go to the contracting officer, but there is no one. And that role is not even going to be filled in the case of USAID. So that was unprecedented. But generally speaking, they should assign someone. You could work with them. Oh, and remember too that if there's a contract specialist or representative who tells you to do something, they generally don't have authority, because you need actual authority, not apparent authority, for the government to bind itself to pay you. So even if you got direction from a specialist or a coach or something like that, those folks are not authorized. And so they're not binding the government. You need something directly from a contracting officer, warranted contracting officer.
Yep. Wow. A few challenges there for sure. So now we're at the point where, there's going to be a lot of activity. There's going to be a surge now that the government's, reopened for at least for a little bit. How would you recommend companies kind of prepare for that, once the budget's approved and going forward?
Yeah, I think you should be ready to use like every tool in the arsenal to the extent that you have the capability to take on sole source awards. Say you're an 8A company. Yes, there's that FAR provision says things are supposed to be competed, but it's not completely valid yet. But if you have that opportunity, or if you're a single source, or you're the fastest source, right? Being prepared to give the customer what they need now, especially if we're looking down the barrel of something in just a month and a half, right? Or 2 months time, 2.5 months time, making sure that you are the one in front of them, your marketing, your capabilities. If you can get something done faster because you didn't have to lay off your people, let's say you paid your folks, but some other people, maybe they lost some of their folks, or you picked up people during this process. Communicating that, letting them know that you are the company that can do this fastest, cheapest, most efficiently, whatever it happens to be, because that can be a justification for a sole source, even if you're a large company. And so being prepared to help the government write that for them, put it in front of them. be prepared to give something like, I'll call it a white paper, but it can just be like emails or shorter letters about why they can do things, how they can do it, how it can be most effective. Like, help them to help you as much as humanly possible. And I've seen generally that the government really appreciates that because it gives them the options and opportunities to do things.
Yep. So those are all invaluable bits of advice, and I know that Polaro Mazza has obviously quite the government contracting practice, and you guys have webinars all the time. So I would encourage everybody on who's listening in to certainly take advantage of that, because we certainly look at that all the time, and it's really great material and great content that everybody should know. So,
Yeah.
any other closing thoughts about how people can protect themselves given what's going on?
The only other thing I'll mention is that if you're a subcontractor, I would take a look at some of my subcontracts before the end of January, when we could be looking at something again, because you have to remember, as a subcontractor, you have no privity of contract with the government, no direct contractual relationship. So you can't file a claim or an REA in the vast majority of cases. You can only really get in there if your prime sponsors you. And I've seen a lot of agreements recently where there was no obligation on the prime contractor to sponsor a subcontractor claim. And if the prime doesn't want to upset their customer, or if they're fine taking the financial hit, they might refuse to file claims on your behalf or file REAs to not upset their customers, which might leave you in the lurch. On the flip side, if your contract doesn't have your subcontract doesn't have a bunch of the flow downs, or it doesn't reference the law of government contracting or other things like that, remember, it's a commercial agreement. And so if you continue to do work, if the prime didn't give you a stop work, they could be on the hook under state law, or under what they call quantum merit, the idea that you did work and they owe you for it because they didn't reject it, or they accepted the work, or they didn't tell you to stop, things of that nature. So just look into some of these options if you wanted to get aggressive or had to get aggressive with a prime contractor, or even, like I said, getting out in front of it into the future, to just be prepared if things happen again.
Right. Well, Cy, thanks. And I'd like to thank Steve, Joe, and Cy for their thoughts and advice today. All really great content, I think. And so now I would like to bring John Martin of Vibrant on to introduce our third and final panel. John?
Thanks, Paul. Appreciate that. And welcome, everybody. Thanks for joining today. As Paul said, I'm John Martin. I'm also a member of the Fort Meade Alliance Board of Directors and Vice President of Business Development with Vibrant. I'll be moderating this third panel segment, where we're going to explore kind of what happens next. So we've all been weathering this storm. Thank goodness things the storm is ending. Now we're going to look at what happens next when the sky's clear. So the budget's been signed, CR's been signed. Let's break down that process from budget signature. How do the primes get funded? How does the flow down to the subcontractors happen? And we'll kind of explore that in this last panel segment. I'm really pleased to be joined by three phenomenal panelists. We have Doreen Harwood, who is principal with DE Harwood, LLC. Doreen brings outstanding expertise and a really unique insight into the discussion, given her former role as a program executive officer within this market. So she has insights into what the government goes through and how the process works. We also have two senior leaders who bring perspectives as large primes within this market. I'm pleased to have Jack Terry with Leidos. Jack is Vice President, Division Manager of the SIGINT Solutions Division within the National Security Sector and Cyber and Analytics Business Area with Leidos. So Jack, thank you for being here.
Sure.
And also joined with Hal Ingalls, who is Senior Business Development and Strategy Lead for National Security with AT&T. Again, we have tried to have a broad perspective here in this panel, and my thanks to all the panelists for joining us today. So thank you for your insights. I know we're running a little short on time. We have this third panel segment here, so we'll go ahead and dive right into it. And I'll start things off with you, Doreen. I know we've all been anxiously awaiting the shutdown to end and seeing the skies clear somewhat and hopefully returning to normal. And given your PEO perspective, we'd like to see if you could shed some light on the process once Congress has approved a CR or a budget. Kind of what happens inside the government agency? How do they prioritize and plan and begin the process of allocating funds out to the industry? And I know you've prepared a slide on this to help kind of walk us through. So I'll direct that question to you there, Doreen.
Well, thank you, Martin, and it's my pleasure to be online with you and, sorry, John, with you and Jack and Al. So good afternoon. I know this is a lot of words, but was trying to break down the priority and process. So working from the top down, we all know that the president signed the budget bill. What's going on the Hill right now is the various budget authorities to the federal agencies are going through a process. So that's the appropriation process. And from that, then there'll be allocations from the Treasury to the various agencies and departments. So with that as going in, hopefully that will occur over the next day or so. Then we move to what the givens are. So during the last 40 days or so, MPO has developed a baseline of essential contracts and task orders. And so each company's set of prime contracts or subcontractors should know what those contracts are because they're all essential. And you should know whether it's an entire contract or a task order. And literally on the PEO contracting officer supervisor's desk, they have that list of contracts. And most importantly, they have the funds run out dates. Then tied to that, they have the primary person's name who's been talking with them from the various companies to make sure that the funds are not running out earlier than anticipated. In other words, that there are no surprises. So that's the given. That's what, I would have on my desk as a PEO. And I would be preparing to get the thumbs up that the funds are coming into the building from the Treasury. It's important to know that at this time, during these emergencies like COVID, government shutdowns, it is an amazing process to witness that there has to be, and there is, and this is a kudo to both inside and outside the building, the entire community, that there is what I would call a full synchronization between the functions within the business management and acquisition organization within NSA, as well as Cyber Command and DISA, and the mirror industry functions. Because what is happening is that end-to-end process is occurring in rapid succession. And the more easily it flows, the more easily the handoffs are across those processes, from funds allocation to the purchase requests that are generated inside the building, contract mods that come to you, industry, the funding then obligations that occur, then you're invoicing back and the government paying you for that work. The smoother that process is, then the more you can respond to what I'll hit at the very end of the slide. So what is happening now? Each of the PEOs working with their contracting officers are developing 3 more spend plans in addition to the one that they had prepared last August. That first spend plan will be looking at all of those funds run out dates and coming up with the amount of money that's needed to keep this is a two-parter, to keep the essential contracts going through 31 January, because that's what the bill is going to fund. That's what the budget bill is going to fund. So essential contracts, how much money, and all other contracts, how much money. And those will be the first purchase requests that go into the process that then will flow over, grab the money from the treasury, and go to your respective contracting officer for them to cut a contract modification. Then there will be 2 more spend plans developed, and this is typically done pretty much at the same time that the first one is done. The first is to then divide up what obligations and outlays are required to get to 31 March, which is mid-year, where MPO, Cyber Command, DISA, they have to spend 50% or more of their money. When I say spend, their obligation and outlays should be coming up, but the big thing is obligations. And then the last is the full year plan to ensure 100% obligations and to maximize those outlay goals. So 3 spend plans, and let's hope that by 31 January, there are not any additional complications with regard to the budget process, or else that word minimum will absolutely come into play and there may be another. But let's not go down that road right now. So I thought it was important to give you my perspective of what I think industry should be doing at this time. And this is, again, from my perspective inside the building when I was there, as well as when I was at Leidos. It is to, my goodness, overappreciate your finance and contracting personnel. On the inside, when I was a PEO, we would feed our business managers and our contracting officers. We would bring them in pizza. We would, smother them in donuts and breakfast items just to keep up the morale, which is something that Angie talked about earlier, and to ensure full communication, which has been a theme throughout all of this. The next is that you need to, those people who have been primary with your responsible CO, keep that communication going, because you want to make sure that their funds run out dates and yours for those 3 spend plans, especially for the first and second, are the same as yours. You want to make sure that they are not underfunding you. So now I'll put on my industry hat. The last thing you need is not to have enough money to get through 31 January and maybe 15 days into February. And they may even, your contracting officer may even give you guidance as to how you might want to modify that funds run out date and tag an extra 15 or 30 days to that estimate. Next is talk with your customer about shifts in their spend plans. So one of, I think it was Joe on the previous panel, talked about for every day of the shutdown, you have so many days that we're behind. And that is true for the spend plans inside the Maryland Procurement Office at all as well. And so it could be that the planned ramp up that your mission partner told you about, that they wanted to occur in February, they want to occur on December 1st. So I would say that most of your mission customers are going to err on the side of making up that lost time. So you will have to respond more quickly with staffing needs and staffing changes. Very different than what the plan was last August, when we didn't have this 40-day delay. And so foot stomp going to the end, shifts in plans will include acceleration of the FTE ramp ups, because it's going to be extremely hard with 40-45 days in the rearview mirror to make those mid-year obligation goals and those end-of-year obligation and outlay goals. So put on your tennis shoes. I'll turn it back to you, John.
All right, Dorian, thanks so much. Those are all fabulous points to keep in mind for everyone. And I think it just carries through that theme we heard from the very beginning with the first panel and carried into the second, this theme of communication and remaining in sync with all the players. We're all in this together. So thanks so much for sharing that. We really appreciate it. All right. This next question goes to Jack and then Al. As large primes in this space, you've been through this before. Can you both share your perspectives on how you prepare leading into these storms, these shutdown storms, and how do you prepare for that surge of activity that Doreen highlighted? You know, putting our tennis shoes on and running quickly here with revisions to our plans. How do you plan and prepare for the surge of activity once these funds are released to you as large primes? I'll start with Jack on that one.
Yeah, appreciate it, John. Yeah, I think it's been mentioned a few times. I think over communication as we get ready for this is key. You know, as of this morning, and I would say my bullets on my chart have changed 5 times leading up to this, depending on where we are in this process. You know, as of this morning, as we look to this future surge, RCOs have all been in contact with our program managers. I think we have one outstanding. We expect that we will be at risk. We also expect our teammates to remain at risk, but all of those hours that were associated with folks during the shutdown, we expect to be paid. We expect this to happen in weeks, not days, but not months, right? As Doreen said, it's going to take time for folks to get back to work and really fully engage. This isn't a 2-step process, it's a 40-step process. And if one person is not in that process, it all seems to slow down. So we expect this to be weeks, not days. Arguably, I appreciate all the calls we've received from everybody on this line that are our primes. We're subs, we're a large company, but we're subs as well. So I really appreciate the over communications that's happened from our medium-sized businesses, our large businesses in which we sub to them. So we're all sort of working this together. Individually, from a Leidos standpoint, we're borrowing resources from our corporate teams to be prepared for the uptick in mods that we're going to have to send out to our teams when we receive them. Fortunately, we had a lot of people working during the shutdown, so I think every prime is going to be a little different. We probably have 15% of our work that wasn't happening, so we have a much smaller subset of mods that we're going to have to get out to our teammates. Fortunately for us, maybe that'll happen a little quicker. I'll say this, if anybody on the call, small, medium, even large businesses, for some reason, if there's some sort of hardship and you are struggling today, reach out to your prime, reach out to your subcontract administrator and ask them to elevate it to their leadership. We're happy. I think the entire industry is happy to support our small and medium businesses that are hitting those walls. We understand 40 days is an incredible time frame. So if you're hitting those walls and you can't wait another week, reach out and let us help you. Thanks.
Yeah, that's great. Yeah, really appreciate that. Again, appreciate you sharing your insights there. Al, same question for you. How has AT&T prepared for the surge in activity, and what's your perspective there?
Thanks, John, and good afternoon, everyone. And I'm just going to preface by saying Jack and I did not rehearse this together, but my response is pretty much parroting what Jack said. And I can't, for the sake of sounding like a broken record, communication, over communication. Don't stop communicating. And it starts to the point, I think, Bill and Amy and Angie and Mike mentioned, start that ahead of time before the shutdown or some other event takes place, so you know what you're coming up against. Like Jack mentioned, we worked. Some of our prime contracts, there was some impact, but minimal in many cases, and that included to many of our teammates on those contracts. So while we might have been at risk, or bled off whatever remaining pennies there were now that they're no longer being made, we were able to invoice in some cases during the shutdown because there was still money. But to the point, I think in the second session, most primes, we pay when paid. If we don't get paid, then we're not able to pay our subs. Even the large companies like Leidos, AT&T, and the other large kids on the block, if you will, while we have very deep pockets, we also have hundreds of contracts and hundreds of subcontractors. So we can't just reach into our coffers and pay everybody. I will re-echo a comment that you made, Jack, and that is for small companies, very small companies, medium companies. If you're running up against a wall or you feel like you're trying to climb the wall and are not going to make it, go back to your large company primes and see what kind of assistance you can get. Many of us, if not most of us, have the ability through the right approval channels to help cover our really small company prime subs to make sure that they don't suffer significantly. I've had circumstances in the past where I've had the owner of a small company come to me, not it while I was at AT&T, I was elsewhere, and they actually showed me the letter from their bank that basically said, your line of credit is going to be extended no more, and you owe us a lot of money. And effectively, they were looking at filing for bankruptcy, which we did not want to see happen. I'm going to go back to the communications. We started conversations with our COs prior to the shutdown happening. And to Doreen's point about doing assessments of run out dates for contracts, that was an almost everyday occurrence, it seemed, as I interacted with some of our PMs and some of our finance folks. They were constantly in those discussions with COTARs, CORTs, and contracting officers and specialists to help provide that perspective to be prepared in case. And then we had at least one of our prime contracts, and this might be similar to most every other company that has a prime going on. We had a circumstance where only a few people were authorized to come in and work on October the 1st. And that ramped up to almost everybody on the contract by now before the shutdown ended, because the customers started seeing mission impact and decided, I just can't keep calling Sam, Johnny, and Sally in on a day-to-day basis. I just need them to be here.
Yep. That's great, Al. I appreciate all those insights and the anecdotes. That's incredibly helpful.
Yeah.
Yep. Moving to our next question for both of you, Al and Jack as well. I know, Jack, you mentioned, this is going to take weeks, not months, not days. Can we pull the thread on that just a little bit more? And from the small business community's perspective, what can small businesses really realistically expect in this first day after the signatures have happened down on the Hill and the White House? What can we expect in the first day, say the next 15 days, 30 days after funding is restored, at least with this CR? And then what does the flow of funding look like to subcontractors on the ground? A real practical question here.
Yeah, no, I think, as I said, we're already seeing that communication from the government occur as we speak. I think as much as we ask our folks to reach out to the government for status, I'm sure our smalls are being asked to reach out to their primes. I can't tell people not to do either, but every time a large reach out to the government, it slows their process down. And every time we get a call from somebody or our SCAs get a call, it does slow everything down. So I'd ask everybody to just be a bit patient and realize we're right back into a sort of a normal process that's just going to take that much longer. We don't sit around and prioritize who we're going to fund first. But I will say, if I get a call and somebody's hitting one of those walls, that's one of the things we can do locally without any approvals and prioritize who gets something first. It's not something we normally do, but I'm happy to address that. I'm sure all the primes are happy to address that and deal with what they need to. So just be cognizant that everybody's moving as fast as they possibly can. And every phone call to get status slows that down just a little bit. I will say, as we look forward, something we're looking at, I'm sure our partners are interested as well, but we are working with every CO to determine if time can be made up. A lot of us put time into certain buckets, and our employees are hopeful that if they could work 50 hours a week rather than 40, they could gain some of that back rather than having to take a form of leave or admin leave or leave without pay or whatever bucket they chose to work within. So we're doing everything we can to work with our COs. I'd say for the small and mediums on the call, if you're on multiple contracts with one prime and somebody's interested in working after hours, there might be opportunities to work the hours off on a different contract. There's plenty of work to be done. We all know it. So get creative in those questions. There may be those opportunities. And then I'll follow up something that Sai said earlier about a claim or an REA. If you're considering it, by all means, reach to your prime to have that conversation. We'd much rather be collaborating on that than find out through other channels, maybe that you tried to go direct to the CO or something and have that discussion. So, again, those take time. We all know that. But that's the rhythm and what we're going to be dealing with over the next, I'm going to use the word month. Hopefully it's only one, and hopefully 99% of this is cleared up after about 30 days. Appreciate it.
Yep. Yeah. Thanks, Jack. Appreciate that. Appreciate the flexibility and creative options for small business to help resolve situations when it gets incredibly challenging for them.
Yeah.
So Al, same question for you. What can small businesses expect realistically in that first couple of weeks, first month, from your perspective as well?
Yeah, to kind of echo what Jack just said, the reality is to be patient, and unless you're running up against that wall, be even more patient, because every phone call, every email that comes in is a distraction to the team on the prime side, whether it's a large company or small, in working with the contracting officers to get everything prepped for when the funding is allocated and then able to be obligated out to the individual contracts. Like Jack mentioned is going on within Leidos, we're in the same process. We're already working through with our team of folks getting subcontracting mods ready, so that once we get money put back on a contract and we know what the funding is going to look like, that we can pull the trigger and get mods out to everybody that's active on the contract, so that they can get their folks back to work quickly. And the one thing, and we saw this happen today, and I suspect other companies saw the same thing, right? We all get, I think, the notifications from the Notify You system, and everybody saw the one that said show back up on your next duty day. And so a lot of people showed back up at work today, including contractors that may not have been authorized to be there, and they had to be told you need to go home because you're not authorized to be there yet. And to Jack's point, I do think this is going to be, I hope just a few weeks or weeks, maybe a month at the most, and not any longer to get everything set up. I know on our end, many of our COs have also taken steps to make sure that they're ready to go. Once they can pull the trigger, they pull the trigger. So, I'm going to piggyback also off of another comment that Jack made, which I agree with wholeheartedly. If you have other work with not only your prime that your one contract is with, where you might be able to get your folks back on that contract sooner to provide some coverage for them, while you're waiting for the funding and the authorization to go back to work on that individual's primary contract, do that. You have to have that conversation with your primes. Ditto, if you have other work with other companies that you're a subcontractor to, reach out to them to see if there's some type of surge activity, or you can help with some of the catch up if they might have funding first before you get your funding for the contract that your individuals are supporting a particular prime with. We were able to do that with some of our subs who were on more than one of our prime contracts.
Great, great. All good suggestions. Appreciate your insights, Al. And I guess we are nearing our close here for this panel, but I wanted to give one more opportunity for each of our panelists to offer any closing thoughts on recommendations briefly on what companies can do, anything that hasn't been mentioned, or recommendations to be at top of the queue once those obligations do come through. Any tips and tricks for small business as we close this out? And Doreen, I'll go ahead and start with you on this one. Oh, I think you're muted there, Doreen.
Thank you, John.
Yep.
I would foot stomp Jack and Al's comments with regard to the process, and that goes back to the synchronization, the end-to-end from the government allocation from the Treasury all the way through funds allocation and obligation contract mods. So making that as smooth as possible will get you on the top of the pile, because those actions, I would say contract actions that have a question about them, that immediately takes them off that pile into the questionable pile, or the I got to straighten something out before I proceed with pile. The other, I would say, which I don't think we've talked about yet, I alluded to a little bit in the slide. So you have the funding direction. Actually, this might go to Al's point with regard to people showing up at work today. So you have what you're funded to do, what you're authorized to do, and what you're appropriated to do via your contracts. And then you have missions expectations. So mission is not part of this process. They do not necessarily know all the steps that allow industry legally to come in the door and be paid their hourly or salaried wage. So having your program managers, your task leads on the ground, understanding what mission is expecting, and then where there are disconnects, helping to resolve those communication hiccups and or explain a part of the bureaucracy, the financial business management bureaucracy that has to take place before the last half of the people on the task order can walk in the door, will also get you on the top of that pile, because those disconnects, again, will cause I need to work through this communication problem. I'll put it on this second pile. Understand if there is a disconnect, and if your program managers, task managers can I hate to say educate, but inform the mission managers of the steps that are in process, kind of take the angst off them, that would be great. And or if there's a greater conversation that has to be had, then those program managers need to come to whatever level of the company, whether it be sub or prime, whatever processes you have in place in order to help mitigate that disconnect.
That's great. Excellent, Doreen. Really appreciate that. Wonderful. Al, any additional recommendations or thoughts from your perspective?
Yeah, and I'm going to piggyback off of a comment Bill Donahue made during the first panel, and that is do a retrospective. So we're back, the government's back up and running as of today, more or less. But start to think through yourselves what went well, what didn't go well, despite the fact that there was a shutdown. That's not the fun part of the thing. And then at the right point in time, sit down and have a conversation with your prime or primes and say, hey, I really appreciate you doing this for me while we're in this shutdown window, but I really would have liked to have heard more about this or more about that. That's all part of that communications dialogue, but it's an after action report. Every event should have an after action report. because you learn from that.
Excellent. That's great. Appreciate that. And Jack, same to you. What recommendations as we close this out would you have for companies?
Yeah, just real quick. Two things. One, watch your email, respond quickly, right? Double check you didn't miss a question from a prime that day that just asked about one of your employees prior to them releasing a mod to you. Whatever it is, double, triple check that email and respond quickly. Again, I'll just reiterate the hardship side. If there's something you're hitting a wall, reach out to your prime's leadership. And lastly, while not associated with this at all, a shameless plug from my subcontract administrators, be sure you're getting your CMMC level 2 certification.
Good point. Good
Always
point, Jack.
good. Thanks for that tip. Yeah. All right. Well, that's great. Well, just heartfelt thanks to all three of you, Doreen, Jack, Al. We really appreciate all your insights, and thanks to all of our panelists as well. On behalf of the Fort Meade Alliance and the Meade Business Connect Committee, just want to thank everyone that participated today. Our audience members for joining us. Hopefully, you found this valuable. I know, we're, as a member of the board and all of us in the Meade Business Connect Committee, we really understand that the challenges facing this region due to the shutdown. We're all in this together, and all our customers, the mission, industry, businesses, our employees and their families, we've all been affected in many ways by the shutdown. And it does seem like budget uncertainty and continuing resolutions are the new normal for all of us. So we really hope you found today's content to be valuable. We discussed some lessons learned from the past, from some successes that we've had from some of our small business leaders. Hopefully you've gained some actionable strategies to address the challenges, kind of what to do today, how to be even more prepared, and opportunities to be more prepared in the future. We talked about communication and retrospectives and building those relationships with the industry primes, with our government customers, with our bankers, and just to be more prepared for the future. And as Bill mentioned at the beginning, just to try to reduce that stress a little bit the next time. And we believe we will be in the similar situation at some point in the future. And hopefully today has helped everyone prepare a little bit more for that. So thank you all very much. I have a couple of public service announcements. I think Tim has a slide there. But you will be receiving, first of all, a survey link about this event. We do take your feedback very seriously. We appreciate any feedback you'd like to share on the content, the speakers. We're always looking to improve each of these meetups and make them value add for your organizations. We do, as you see here, we have the President's Reception coming up on December 4th. So we look forward to seeing everyone there, celebrating and giving back to the community with toys as well. And then we have a Meade Business Connect meetup on December 3rd. Which will be virtual. We're going to talk about HR and benefits strategies. There's a number of things that are changing in 2026 and 2027. So we're going to break that down a little bit in about a 1-hour meetup there on December 3rd. So again, many thanks to everyone that participated today. Hopefully this was valuable, and all the best to all of you all as the skies clear and we all return back to our normal. So thanks everyone, and have a great evening.
Thanks all.